Is there a correlation between what the Fed is doing, and you guys know how much I love the Fed? Is there a correlation between what the Fed is doing and the stock market, right? Well, this is from the, this is clearly kind of explains what's happening here, right? So in the chart, you guys have two lines. One is the orange line. The other one is the blue line. The blue line is the S&P 500 going back to 2010, okay? On the left side, on the lower left, you guys will see the 2010 and the price of the S&P 500, right? 1,000, 2,000, 3,000, 4,000. Now we're at 5,000 actually, if you were to update this. But you guys also will see the correlation between the orange line, which what the Fed is doing. Remember the brrr, printing machine, print and spend, print and spend, print and spend, right? Okay. Well, there are times in history that the Fed has to do this to save the economy, like in 2008, great financial crisis. They should have let the banks die. They didn't, of course. They printed $800 billion, right? If you guys can see that spike right at 2020, the market took a swoon, obviously, but then came right back. But what did the Fed do this time? This time, they printed $5 trillion to save the economy from the abyss, right? And sure enough, the S&P always responds positively to that because there is money pouring into the economy, right? I mean, basically free money. So you guys see the correlation of what's happening here, right? So in 2020, that orange line spiked from 4 trillion on the right-hand side. You guys see 1, 2, 3, 4, 5, 6 with dollar signs. Each one, those are in trillions, not billions, trillions with a T, okay? So Fed pumped from 3 trillion to about $8 trillion, $5 trillion into the economy. And sure enough, S&P definitely responded. Now we're in the phase of Fed killing the inflation, meaning weaning off all these trillions in dollars they're putting into the economy. Is it an easy thing to do? Absolutely not. And look at this correlation though, right at 2022, because we have the inflation problem, right? The Fed said we're going to reduce our balance sheet. That means they're going to suck liquidity out of the markets, right? Well, what did the market do in 2022? Absolute took a dump, right? About 30%. You guys see that downtick over there, right? Well, if you just kind of figure out what the Fed is doing with the money supply, how much they're pumping into the economy, how much they can take out of the economy, you can literally now fundamentally understand the effect or the correlation of the Fed balance sheet versus the S&P 500. Can you trade it on a long-term basis? Yeah. But another reason, by the way, the market always has gone up. Yeah, it has its dumps, it has its shitters, or temper tantrums. But every time this happens, Fed pumps, right? Money into the economy because they have to. Guess what? Why? Everybody's 401k, everybody's IRA, everybody's pension plans, they're all in the stock market, right? Fed cannot, that's why it's called the Fed put. So Fed is basically sitting there with their hands open and saying, look, we're going to do everything we can for the market to be stable because we cannot afford everybody's retirement to go into the shit, right? And so, but then on the other hand, now what are they doing with all this pumping? They create this animal called inflation, and which I talked about on a segment, the video we put out this weekend, I think. Well, to kill inflation, what is the Fed doing? Raising interest rates. What is that doing? Sucking money out of the economy, right? Everything has become more expensive. Initially, they did create this animal called inflation. Now they're trying to kill that animal by raising interest rates and lowering the balance sheet, Fed balance sheet. At the moment, the Fed balance sheet stands at $9 trillion with a T. Look at all the way back to 2010. Where was it? About $1 trillion, right? Ninefold increase in, I don't know, 14 years. But uncanny correlation between S&P 500 and what the Fed does exists. So you guys have to go to where? Remember, we talked about FRED, F-R-E-D, Federal Reserve Economic Data. I showed you guys where, you can Google it and go to that. And all these are there, what they're doing with the money. They're pumping. They're, pumping liquidity, adding liquidity, or they're sucking liquidity, okay? The way they suck liquidity is by increasing interest rates. Because if you can get 5% guaranteed money on a 3-month treasury bill, why would you go open a business, right? That's how economy slows down. That's what they're trying to do. They have to slow things down and they have to take liquidity out for inflation to go back to their target of 2%. Are they going to be successful? Time will tell. So, and here is the one. This is the episodes that we've experienced. This is the Fed balance sheet and the S&P 500 again with these bubbles. 2007-8 financial crisis. Look what happened. They spent $800 billion under TARPs to save the economy, to save the banks, right? Another crisis came, the Eurozone crisis, right? That's when they pumped again massively, right? And look what but then you guys see the trajectory of the pump, right? In 2008, look, every 10, 12 years, there is a crisis. It's called Black Swan. I talked about it. What is it that the Fed is doing? Pumping money, creating money to save things that are going into the abyss. In 2008, they only had to pump 800 billion. Look at the one in 2000, right? In the Eurozone crisis. Look at the trajectory of that pump, right? And then it kind of flattened out. And as soon as it flattens out, you guys see for a long period of time, right? What happens? Market still goes up, but not at the level that when the pump is in, okay? And then look at 2020 during the pandemic. Look what the market did. Absolute tank, 40% in about 2 months, right? But then look at that pump. So when you guys see that pump in action, buy stocks, because the Fed is saying this is it. This is the floor. I'm putting a floor into this. And one other thing that my mentor have always told me, even 30 years ago, do not fight the Fed. Don't fight the Fed. You will be killed. You cannot fight the Fed. You cannot fight something that they can create money like monopoly out of thin air and pump it into the economy. You just can't. So you got to go with the flow, and that goes back to trade like with the trend. And then look what the S&P 500 did. Doubled literally during COVID and after COVID, because the pump continued. The pump continued. See the blue line keep going up? Now, when did the market take a hit, right? The inflation unwind. Well, they created the inflation. Now they're trying to unwind now. Now you see the blue line kind of going down, right? Well, blue line going down, by the way, there is a lag in this. There is about a 6-month lag, right? The market is always ahead, people. Market is always 6 months ahead. Stocks are always 6 months ahead of their earnings. The indexes are always 6 months ahead. How does the market know that? Market knows that, so that's why you don't question the Fed, and you don't you can question the Fed, but you never question the market. Market knows best. The price is telling you something, okay? And sure enough, when the market took a dip of 30%, but now it's back to all-time highs, we're going to find out if they're going to pump now, because there is absolutely not rumors. There is, talk that the Fed is going to start cutting rates because these high interest rates are killing the market and killing the consumer. Since we are 75% dependent on consumer spending, our GDP, that's what they're going to do. We'll see. And that's why I don't think they're going to be able to kill inflation to 2%.